Well, it happened. The January 2026 crash. The warning signs were everywhere, but few wanted to believe it would actually come to this. For months, experts and everyday investors alike debated whether the market could keep climbing forever. We all saw the signs. Markets overheated, valuations sky high, everyone suddenly a genius investor. It felt like nothing could go wrong, and optimism was at an all-time high. People were making money fast, and the fear of missing out drove even more to jump in. But what goes up must come down, and this time, it crashed hard. The drop was swift and brutal, wiping out months, sometimes years, of gains in just a few days. Now, portfolios are bleeding, headlines scream recession, and panic is everywhere. The sense of security people once felt has been replaced by anxiety and uncertainty about the future. It's normal to feel shaken. Years of savings can vanish in days. Families are worried, and even seasoned investors are questioning their next move. That's why, in moments like this, smart investors look for something real, something that stood the test of time. They want stability, not just promises. The big question, what now? Sell everything? Buy the dip? Or just wait and hope things recover? The uncertainty is overwhelming, or is there a safer option? Is there a way to protect your wealth from the chaos and unpredictability of the markets? I'm talking about gold, not to get rich quick, but to protect what you've built. Gold has been a store of value for centuries, surviving wars, recessions, and every kind of crisis. Let's break down why this crash is a wake-up call, and how gold could be your best defense in uncertain times like these. So, what is a market crash, and why does it send shockwaves through the entire financial world? It's a stampede, panic selling, prices plummeting, and value evaporating in a matter of hours. Investors scramble to get out, and the chaos feeds on itself, making things worse. In January, a perfect storm hit. Disappointing earnings, global supply chain chaos, and sudden interest rate hikes all sparked widespread fear. Headlines screamed uncertainty, and confidence crumbled. Automated trading systems kicked in, dumping stocks at lightning speed and accelerating the fall. In just a few weeks, trillions of dollars in value simply vanished from the markets. This is the risk of paper assets. Their value is built on trust and confidence. When that trust disappears, so does your wealth, sometimes almost overnight. Unlike a house you can live in or gold you can hold, stocks are just numbers on a screen, numbers that can vanish in a flash, leaving investors stunned. The lesson here? Diversification is absolutely essential. Relying on just one type of asset can be a recipe for disaster. You need assets that don't move in lockstep with the stock market, investments that can hold their value or even rise when stocks are falling. When stocks crash, you want something stable, or even something that grows stronger as others panic. That's why, for centuries, people have turned to gold as a safe haven in times of crisis. Let's explore why gold has earned this reputation. Gold isn't like stocks or cash. Stocks depend on profits and confidence, both of which can be fragile and unpredictable. When companies struggle or the economy wobbles, stock values can plummet overnight, leaving investors exposed. Cash, on the other hand, might feel safe sitting in your wallet or bank account, but inflation quietly eats away its value year after year, reducing what your money can actually buy. This is especially true after financial crises, when governments often print more money to stimulate the economy, flooding the system with new bills. Gold is fundamentally different. It's rare, tangible, and exists outside the digital world. Unlike paper money, gold can't be printed at will or erased by a government default. Its value isn't tied to a CEO's decisions or a government's promises. It stands on its own, independent and enduring. For thousands of years across civilizations and continents, gold has been recognized as real, lasting wealth. When trust in stocks and cash fades, during uncertainty or crisis, people instinctively flock to gold for safety. It acts as financial insurance. Demand for gold surges in turbulent times, and as more people seek its protection, its price often climbs higher. Gold isn't about chasing quick riches, it's about preserving your wealth and not getting poor when everything else fails. That's why gold shines brightest when other assets stumble or collapse. Now let's look at the proof behind gold's enduring power. History proves gold's value in a crisis. In 2008, as stocks crashed and banks failed, gold doubled in price. In the 1970s, with inflation soaring and stocks stagnant, gold skyrocketed from $35 to over $850 an ounce. Even in 2020, during the COVID panic, gold hit new highs as governments printed trillions. Time after time, when markets melt down, gold preserves wealth. It's not luck, it's a pattern. When trust in the system breaks, capital flows to safety. Gold is the world's oldest safe haven, trusted for 5,000 years. The 2026 crash is just the latest chapter. Ignoring gold means ignoring history's most reliable tool for wealth protection. So, how do you actually buy gold? The simplest way: physical gold, coins or bars from reputable dealers. Store it yourself or in a secure vault. Don't want the hassle? Buy a gold ETF like GLD or IAU through your brokerage account. ETFs are easy, liquid, and backed by real gold. Physical gold gives you direct control, outside the financial system. ETFs offer convenience and accessibility. The key: take action. Even a small allocation, 5% to 10%, can protect your portfolio. After a crash, doing nothing is the riskiest move. Gold is your defense against uncertainty, now more than ever.